Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Tuesday, December 3rd, 2013. So far, December has gotten off to a rough start, which is counterintuitive to most people's thinking. But again, over the weekend, this past week, I said to members, expect a down December. Why? Well, ultimately, there were too many negative signals on the charts. And at this point, you have a market that had upside potential from the previous breakout high of 2%, 3% max, while downside was 5, 10%. So, needless to say, with those signals and that risk reward ratio, it was smart to look on the downside. And sure enough, I took some profits on a short call that I've been holding for a few weeks, and that was 3M. Take a look at 3M today, guys. Down a buck 82. It's bounced actually pretty nicely after we moved out of our short, covered our short. But look at this drop over the last couple days. Epic drop, and actually a pretty solid bounce now as the markets are upticking a little bit as well off their lows. Couple other keys to look at today. Let's go back to the SPY, talk a little bit intraday. And this is the daily chart. And you can see right here, the market is coming into the daily 20 MA. So that's going to be just short-term minor support. Very, very minor, I want to stress. And the main reason why it's minor is because you've chopped through the 20 so many times this year and you've hammered on it right over here, even in spirit of touch right here, that at this point, yes, could it give you a small bounce here and there, especially in this buy the dip mentality market? Absolutely. But I overall think you will see a move through, regardless of whether or not you get a day or two bounce off of this. And I mean small. When I say small, I mean small type bounce potential. Going back to the intraday chart of the SPY, which again, remember, this all mirrors the S&P 500, you can see right now where the markets have stalled and put in their low. All right, very significant little pivot area right here at the 179, 20, 30 level. So this pivot high, this little pivot low, little choppiness around that level, and then this little pivot low, we finally come back into that level. And as a short-term level, this is giving the markets a nice little bounce. So again, you can see the markets are upticking. You could actually bounce back to the 20 MA here, which is around the 179.55, 60 level, which is another 15 cents higher. You'll start to run into some pretty significant resistance right around that 20 MA, though. You can see it also kind of matches up right with this little pivot low right here as well. So again, nonetheless, very nice little bounce on the markets here as they rotate themselves back higher. All right, so markets again selling off. You might wonder why. A lot of people are asking why. And to be honest, wow, look at the markets jump up here as we speak. So I just talked about the markets jumping into that moving average area. And sure enough, we're really coming right up into it as we speak. So very impressive little pop here on the spiders. I just called that. And sure enough, no sooner did I say those magic words than the markets did pop up here. But in any case, with the bounce coming in and people wondering why the markets have fallen these last couple days. The charts are really number one, but if you're looking for reasoning, there's just a lot of headwinds in this market. The Federal Reserve is coming out mid-month, and will they taper, will they not taper? This week alone, you got GDP, you got non-farm payrolls, ADP private sector over the next 3 days, 4 days. There's a lot of information that could be negative, could be positive, and I think that's putting the market at a little bit of a disadvantage here and making most people, most intelligent people, I should stress, take profits. The other thing that I think was a big indicator, and I talked about this over the weekend and even yesterday to you guys, was yesterday was Mutual Fund Monday. All right, that's the Monday, first Monday of every month where new money flow should come into the markets. The fact that we were down yesterday was extremely bearish. That told us that there's minimal money coming in from even average investors at this point as they've thrown so much money in the markets already. And institutions aren't buying this market. They haven't been buying for a long time. They've been distributing. All right, and right here, I want to show you this, guys. Last week was a great indicator. Last week was a super light trading week, yet we had sharp sell-offs of institutional and hedge fund selling. Right here, right here, right here, and even on Friday, which was a half day. Look at the size of this move down Friday into the close. That tells you that institutions aren't just sitting on the sidelines anymore, letting the amateur investor push the market up. They're actually selling. And that's a huge deal. That's a change in factors, a change in sentiment from these institutions. All right, spiders are pushing up, so look for this market to actually push into the, wow, look at this. This you're hitting the 20. You're coming right up into the 20 as we speak. So that was a great call right there. As the market's pushing up, we'll see if it pierces the 179.50, 60 level here. I think that would be right around the tops, 179.60, 61 area. So we'll watch and see if that does happen. But nice push here on the spiders. Good little bounce off the lows. We've actually bounced about 40 cents in the last 15 minutes. Remember, these are 10-minute candles, so every candle is 10 minutes. So we're halfway through this candle, and this was 10-minute right here, so therefore 15 minutes. But in any case, market continues to push up. 179.60 just got tagged, and look at that 20. So again, folks, beautiful action, beautiful price action here as the markets, again, have gone right to where I said they would go, basically within a couple minutes of me saying it. All right, couple other things to go over, and looks like 3M, us covering our 3M near the lows of the day was an ingenious play as we maximize profit right there. Let me see what else I want to discuss. There are some weak stocks out there. Amazon is weak, all right? So Amazon very, very weak here. And it looks to me like Amazon put in a top when we gapped up yesterday. And I talked to you guys about this yesterday, in fact. And sure enough, it does look like that was a correct call. Now, how did I know that? Well, because you had, first of all, PPT methodology on the upswing. And then the gap up yesterday happened to be an extended gap up, a weak gap up as we call it. And ultimately it came on unparalleled hype. Unparalleled hype here. And anytime you do that, you have to look at it and say, all right, listen, the stock is at all-time highs, at levels it shouldn't be at. When all is said and done, weak gap, PPT methodology saying a sell-off, this is going to fall. And sure enough, today, not only did it reverse yesterday and put in an ugly reversal candle, today it's down another $7. So these are just signals that you want to pay attention to, folks. Really good signals, too. I mean, these are like prime grade A signals that you can profit unparalleled amounts of money, in my opinion. All right, so in any case, guys, let's keep our eyes and ears open. Markets continue to hammer on these key levels. Trying to see if there's anything else on the radar that I want to go over. But I think at this stage of the game, that's pretty much it. Let's see here. Apple. We should touch on Apple. I think Apple's worth a touch on. Apple reversed yesterday after a 3-bar surge and had a nice pullback. Today it's pushing up beautifully. So you got to give credit to Apple, in my opinion. And that stock is actually continuing to show some good signs of strength today, even in a weak market, weak tape. NASDAQ is actually performing relatively well because of Apple. NASDAQ is only down 0.3%, while you have the S&P and the Dow down over 0.5%. So S&P's down 9 points, Dow's down 113, NASDAQ's only down 15 points. So nice little move there on that. All right, I'm just trying to see if there's anything else to kind of pay attention to here as the markets, again, if we go back to the spiders, take a look, guys. Did we stall out perfectly or what? Right here into the 20. I mean, that's really where we're sitting here. And beautiful to see. Absolutely fantastic. So I'm just trying to see if there's anything else. You're actually pushing through, but I think you'll pull back now. Actually, honestly, if I was a betting man, I mean, unless it could be a buy program, we're still near the lows. But nonetheless, you're right into the 20, so you would anticipate a little pullback. We'll kind of keep an eye on it here. I'm almost tempted to short it here, but I don't think you have enough PPT methodology to tell me it's a high percentage trade. So we'll sit back and just kind of watch and see how it plays out. One of the big calls of the day, guys, as you see the spiders pulling back a little bit, this call right here. I gave this to members in the intraday stock chat today, and I posted it on our social network, which Research Center members and chat members have access to. I told them it was a buy at $8. I said it was going to go at $8. This stock hit $11.44 today. Members literally made 25% on their investment who held it. Beautiful move. Unbelievable move, in fact. All right, so nice little price action there on that. I'm trying to see what else we have out there. Scanning through. Couple big movers. OMED was a big mover today, although it's pulled back dramatically off its highs. I tried to short it right up here at the highs. I had a master level at 31.50, got as high as 31.99, but there were no shares for me to borrow. And again, that's dependent on your clearing firm. Some clearing firms will have shares, some won't. It's just something you have to kind of go with. But markets, again, big time bounce here, beautiful bounce. And another stock that I gave to you guys, and a lot of you guys made money on. Take a look at EPZM. All right, I made some good money on this one today. Bull flag coming into a time count. Today it popped $1. That's a daily chart. So again, it had such a big fall. Bull flag popped up $1. Beautiful trade right here. You can see the intraday chart from the alert. We talked about this around 2080 when I was talking about it to you guys. And my members, again, I alerted them this morning around 2080, 2090. Ran all the way to 2190 for $1 gain. So the profits are there. I mean, that's the beauty of what we're doing here, folks. I don't care if the market's going up or down. The profits are there. We can short the market like on Amazon, talking about how that's going to go down. We can buy the market like ICLD or EPZM. It's there for the taking. Question is, are you man enough, woman enough to step up and profit with the pros? I mean, that's what it comes down to ultimately. Taking a look at the spiders again, look at this. So spiders, see how they pulled right back? I mean, this is just PBT understanding. Now, there wasn't a high enough trade for me to do it myself, and that's why I alerted you guys to that it wasn't a high enough trade. But ultimately, you can see it's down ticking a little bit, which is okay. For a quick scalp, you make a few bucks. That's about it. Let me see what else here. Yeah, I think that's about it. I have some small caps on my radar that have pulled back pretty significantly that I'm interested in accumulating as swing trades. Remember, this market overall I think is going to go down for the month of December, but I still think overall you'll have buy the dip mentalities every few days. All right, Tesla. Let's talk about Tesla. Tesla's having a monster move today. Great short squeeze on Tesla, guys. Up $17 to $18. Look at this. Never hit the 200. This was my buy price right down here, which is a shame because I would have really liked to have accumulated some down there. It didn't get there, no big deal. There's so much money to be made in other things, but again, that was a beautiful thing right there on Tesla. So Tesla and Apple are probably the big leaders today. Exxon's also up today as oil is up. And I think that's interesting because a lot of the commodities have remained very, very weak, but oil's actually getting a pretty nice bounce today. Exxon's responding with that with a nice uptick as well. Take a look at gold. Gold got hammered yesterday. It's basically having a pause day, which is actually bearish. Means most likely you're going to head lower. I still think you're heading down to $1,000 on spot gold. GLD will get down to about 100. 100 will be the area, pierce of that, where I start to accumulate. All right, silver, SLV down 6 cents. That continues to remain weak. Silver's been getting crushed lately, almost down to a double bottom here. This is a beautiful little level on silver. I called the silver decline and the gold decline when they broke their key trend lines, upsloping trend lines here. Look at the decline since then. All right, if we go to the GLD, right here, look at this. Right there, that was the signal. Take that line, just draw it up and connect it. When you broke down, that gold was going to go down. And ultimately should end up here before it gets another big bounce, and then it'll have a big bounce and another decline to 100 on the GLD. All right, so that's what we have going on here. Spiders, again, beautiful stall out right at the level. Beautiful call there for an intraday video for those of you that are interested in seeing what we're seeing, and you're still stuck right around that 20 MA. The more you stay around here, the more likely you're going to go up. So I would say if it stays around here for another 5 minutes, you'll probably break higher, which, again, as I avoided that trade, I mean, yeah, could I have made a couple pennies on it on a pullback? Yeah, but nothing major. So it looks like that was the smart decision to avoid, at least at this point in time. And it's just about odds. The PBT methodology and an assessment of risk-reward just gives you the odds. What are the odds of this working out? What are the odds of it not working out? How much am I risking to make how much? And does that make sense with the PBT methodology? And sure enough, that's how you get the high percentage, 80-90% success rate that we trade with. All right, guys, on that note, I'm going to step aside. Have a great afternoon, great evening. Thank you all for watching. Come take the 7-day free trial here at themoneystocks.com. Research centers for swing traders and investors. Day traders, head over to the intraday stock chat. Take care.